Hey, what is going on, guys? Edward here, back with another video. So Friday this week, of course, was a little short because we had holidays on Wednesday, so no trading on Wednesday. So it's kind of short week for me. I feel like the week was definitely over really quick. I don't like holidays. So let me just show you the breakdown of this trade I took today. I actually had a partial loss today. I was actually caught in losses in one position. This one right here was actually caught in losses. Probably this was an early position, and I'll explain what I did here and why I was actually still interested in looking for sales. Um, Price was tricky today. Like, I'm not gonna lie. Some brokers, I normally analyze entirely on TradingView, right? And then on my broker, I go and execute, right? But today I had to switch between this broker right here. I think this is Capital Com. This is Capital Com, yeah. And this one, because Capital Com was showing me something different than the price, right? The price I was seeing on Capital Com today, this low was not being taken. But as a matter of fact, it was actually taken. My broker actually did sweep this low. So I had to switch, to look for a different broker, to look as similar for the price, as my own broker. I don't trade directly from TradingView. I trade on NT4. So, anyways, that sort of messed up a little bit my bias today, but let me break it down here for you, like right before we get into this point. So let me show you right here, pretty much this morning before we started. Okay, so 8 a.m. in the morning right here. This is New York session, right? That's when New York session opens. So what am I seeing, right? I'm seeing so far, of course, first of all, I always do this with my students. Based on the candle closure, let me close this. Based on this candle from yesterday, right? What do we see? We see the price actually swept this highs, right? We have a failure to close above, at least this previous high, right? We have a failure to close above. We sweep that high, and then we retrace back down and close bearish. So today, my bias is bearish. My bias is actually bearish. So we're probably, because we were tapping already this daily fair value gap. I'm just thinking, hey, there may still be a chance the price may actually push up today. We actually had news at 9:45, by the way. So I was thinking, okay, well, let's see what sort of reaction we're going to have. But my bias is bearish, and we're probably going to go. I don't know. It's about to. I think we're going to fall a little bit more. Probably not, because we've been so vertical. The price has been so freaking vertical right now, almost vertical move, and kind of expecting a pullback. It's healthy, it's actually healthy for a pullback to happen. And it needs to correct. We're so extended, this expansion is huge right now. If you look on the weekly time frame, right? We're so extended. So we have a big inefficiency right here that, hey, I kind of want to see the price go there, and it will definitely give us more opportunities to hop in. So to take. So let's go back here and let's mark up at 8 a.m. There we go. So what am I seeing? Of course, the first thing I see before I start trading, um, I see that the price had taken during London session, swept this low. That's the daily low, right? It is being swept. And I'm thinking, okay, I didn't want it to see actually this by the time I wake up. I kind of wanted to see price go a little bit higher overnight, probably somewhere much deeper into this fair value gap right here, right? Before dropping during New York session. So the sweep happened during London. So it sucks. I don't trade London sessions. So I kind of want to see what's going to happen. So I went directly right there. When I see that move, I see price. Price did sweep this high, tap into this order block, fair value gap, displays to the downside, very strong move to the downside, leaving another 1 hour fair value gap and swept that liquidity, right? So I'm still bearish. Even though, we swept liquidity, I still kind of want to see the price probably continue going to the downside. And I marked up that 1 hour fair value gap right here. So when New York session opens, this is what I was seeing. This was actually my first position. That this is what I did today. So kind of right here, this was a change. Sorry, right here, change in the state of delivery. I was actually seeing this sweep, right? Candle, this 3 candles to the upside. This is the actual order block. Change in state of delivery or order block. So another thing that I was seeing is on top of this, okay, we have this breaker and we have this fair value gap inside the breaker. So I think to myself, okay, well, that's a nice unicorn entry model. We have a breaker, and on top of the breaker, we have a fair value gap. So, I mean, why not take the shot right here? So I did take the shot, and as you can see, price actually tapped this little candle right here. It tapped the fair value gap and the breaker, everything. It tapped the unicorn, and nice rejection, and it started dropping. But the drop was not showing me volume. It was not showing me any bearish fair value gap or anything like that. As the price was going down, it stopped creating bearish fair value gaps. And then all of a sudden, I start seeing this big momentum to the upside, and I'm like, oh no, don't like that at all. So I decided to close. When I started to see that candle, I don't remember if I even let the candle close. I just know that I was just closing. Now, you may ask me, hey, but why would you close? It's just now starting to tap your fair value gap. No, well, my experience is telling me that, I mean, the speed of this thing is not good. We are in New York session right now, so we're probably going to go, for this London high one more time, right? And then probably drop. So I'm just thinking that my entry right here, it was not the best, So I closed it. Anyways, my entry today was small on this one. I didn't want it to risk much, so I just got it right there. The price actually did end up pushing to the upside right there, as you can see. So price pushed up, and then I'm just sitting back, relaxed, just waiting to see price action do its thing. So I'm waiting now for New York Stock Exchange to open. Right here, it's 8:45. Started to have still some buying pressure right here. Now, this is what happened 9:25 right here. Now, when the price was tapping again this 1 hour, I was using this 1 hour fair value gap as my internal liquidity. What do I mean by that? Well, you see what the price just recently did during London, right? It swept external liquidity, and I'm trying to see if the price from here, it's going to go back to internal liquidity and then back down to external liquidity. So remember, the price is always moving it goes from external, right, back to internal, back to external, to internal, external. What is that? External liquidity are swing, right? Swing points, swing lows or swing highs. These are external, right? And then internal liquidity is they are fair value gaps, imbalances, right? So external, right? External. When the price sweeps an external low, right? After sweeping external, go back to internal liquidity, which is a fair value gap. Ideally, you want to find that fair value gap in premium if you're selling, right? Ideally, you can use your Fibonacci from the high to the low, and you kind of want to find that fair value gap on premium. So you want to sell from there back to external. You can target the external swing low, right? So hope it makes sense. This is, I mean, as simple as I can explain it to you guys. So do not overcomplicate things. So the price swept during London external, and now is going back to internal. What do I have What did I have today in higher time frame? What was my PD array in higher time frame? Definitely this 1 hour fair value gap. I kind of wanted to for this to be respected and top here and go selling. I was not looking something big. It's Friday, right? Normally Fridays are also like Mondays, like trap. You happen to get not that beautiful moves on a Friday. So I'm not looking for something too big. Right here, this was just a 122.6 R, right? All I want is to target this recent low right there. And this was literally just 70 pips. Yeah, 70 pips. For Nasdaq, that's literally nothing. That's almost nothing. So go back to 5 minute time frame. So on top of that, on top of this, this is very important, right? I'm not just focusing in probably just finding one sign, two signs. I want to get the most confluences I can get. So I'm seeing also that S&P 500 has not taken that low, and it had also created this 1 hour fair value gap. So almost in the same position, right? Remember, Nasdaq and S&P are correlated, so they normally, no, maybe not all the time, 100% of the times, but most of the times they tend to go to the same direction. Okay, they're correlated. That means that the actual stocks. Remember that Nasdaq and S&P, these are indices, U.S. indices. What's inside Nasdaq 100? What's inside? Well, there's 100 companies, right? Companies like Nvidia, Facebook, Microsoft, Apple, Amazon, right? Huge companies. So the same on S&P 500. What's inside S&P 500? Well, same companies, right? The same companies there are on inside Nasdaq are inside Nvidia. I mean S&P 500. So this is why they are correlated. So whenever they move, or depending on the day, of course, what's happening, they tend to go to the same direction. And the cool thing about this is we have divergence, SMT divergence, which means smart money, uh, smart money trap. Right here, let me show you what happened. At the top, New York session opens. It tries to go up. Look at this move. Look at this aggressive move right here, right? Immediately, if you look at the same simultaneously, if you look at this high, Nasdaq actually swept this high. It did sweep that high, right? So Nasdaq just created a higher high, and S&P is failing to create a higher high. And not just that, look at the displacement immediately. So that's telling me that, okay, there's definitely something going on right there. So there is an auto block right here, market structure shift right here. If we wait for another candle, boom, it built up this fair value gap. And what do we have? Fair value gap. On top of the fair value gap, we have a breaker. So there's another unicorn right here, right? So I'm seeing that. This drop, of course, on S&P 500, you see that the drop was much bigger. That candle right there was much bigger. This is the candle, right? On Nasdaq. It's just barely closing right there. So we do have now SMT divergence on top. So I really like this. And as you can see, let me show you here, this is the VIP group. I was actually also kind of seeing this sell on S&P, but I did not jump in on S&P. Sadly, S&P did not tap the breaker. It tapped the fair value gap and dropped really nice right there, but did not tap the breaker. So if I was looking to enter at the breaker, it would have left me behind. Nasdaq actually did. So I normally send this to my students every single day. So by the way, if you're interested, just let me know in the comment section, or just check my website, teamprofitsenglish.com, to know my program. So right there, we wait for the next candle. Of course, next candle does this weird move. What time was this? 9:30. This is the stock exchange opening. We do have a fair value gap on top of a breaker. The rest is history right there. You know the drill. Should be taking, you can be placing the entry right away in there, or just simply placing a sell limit right here, or at the 50%, depending on what you like. You get the 50% of the fair value gap if you want to make the risk to reward a lot better. If you wanted to target right here, I mean, there are multiple things you can do. You want to target, you want to know where you can target, you can use projections right here. And you see, coincidentally, between 2.5 right here is the actual standard deviation projection, coincides with the with that swing low, with that external, right? So look at this again. We are going external, sweeping liquidity from external, going back to internal. Now in the middle right here during New York session, we have displacement, sweeps the high, liquidity taken, displacement to the downside, order block, breaker block, fair value gap, market structure shift. Come on, divergence, right? Between S&P. I could have jumped on S&P as well, targeting probably this actual liquidity right here, this lows. I did not do it, but I did call it out on a team. So anyways, from there, you can see price immediately went down. Like, it was very quick. It was a very quick TP on this one. Very simple, straight to the point. My bias was bearish. Why I was bearish? Based on how the candle closed yesterday, right? Candle signs. If you want to learn more of this, just make sure to check my videos. I'm going to leave a playlist right here based on ICT concepts. My explanations, okay? Again, ICT, uh, has a lot of concepts, okay? It is not easy, all right? But if you start now, you're going to find out that, hey, it's actually kind of interesting, and it's a very nice concept to study and very fun to actually trade. For most traders, it's still complex. It is. I'm not gonna lie, but I really enjoyed trading this type of concepts. For me, it's a lot more simple. So, anyways, hope it makes sense. Let me know what you think, guys, in the comment section below. Give it a big thumbs up. It motivates me to keep posting content for you guys more often in this channel. And I will see you in the next one. Take it easy, all right? Cheers.